Hey traders, Steven here. It is Friday, July the 29th. Let's take a look at the overall market, then we're going to take a look at the top ETFs of the week. So I want to start with the NASDAQ because when the markets rally, you're going to expect growth stocks to really pop a little bit more. So let's talk about that for a second. The NASDAQ did something really good when it broke above the 50-day moving average and kind of cleared this pivot right here, right? You had multiple lines of resistance it broke through. Now, when it was up in this range, I said it's reasonable to get a retest, and it did, and then it came right back. So, failure to fail equals strength is, what I have always thought was a good motto to really live by and understand. So it looks like we're really trying to rally out of here. And obviously, our next level is kind of in this zone, right? We have another zone. I'm looking at this as I believe it'll start punching through. And it just seems reasonable that that's going to happen, that we're going to get a more meaningful rally. Now, this could be a bear market rally. It could bump up in this range, and it could even bump up in this range. Like, we don't know. I think what's very, very important is to have your decisions made ahead of time. You don't have to think about it in the heat of battle. On Sunday, you look at the market on Saturday when there's no moving pieces and you say, okay, if my stocks do what, I'm getting out on the upside or the downside, whatever the case is. You need to have that plan ahead of time. That way the thought is made for you. You don't have to analyze it. Or excuse me, the decision is made for you. So let's look at the S&P 500. S&P 500 also looks good. It surged really, really nicely yesterday. Now, here's what's interesting. A lot of times when, the Fed announced on Wednesday, that's this day, okay? The Fed announced, and the market usually pops on Fed day. It does. But as of lately, it's popping and then getting slaughtered the following Thursday. So what I personally like to do is wait till the following Thursday to see if I can get a little extra confirmation, right? And there was some major follow through yesterday, which gives me a little bit better confirmation that the rally is that we're going to have a little bit more meaningful rally. Again, there's no guarantee in anything. You have to be prepared for any scenario. But the fact that the market closed strong the day after the Fed announcement, to me, that's usually a positive sign. Obviously, we have developments all over the world at any point in time, but that's really what I'm looking at. Now, obviously, the downside, and kind of let me go back to the NASDAQ for a second. The downside to being patient and waiting is sometimes you have to pay a higher price, right, for that extra confirmation. Like with the NASDAQ, you get the market to pop, you wait till the close on Thursday, and then you have to wait for a little extra confirmation. And some stocks can get extended, so there is give and take. However, that extra confirmation that I've been waiting for this whole downtrend has absolutely positively saved my bacon. And, the reason I say that is because I haven't been getting sucked into every 2-day rally that has failed. There have been so many very powerful, strong 2-day rallies that just fail. There have been a lot, and I have sat out 90% of these. So, you want to play the numbers game in the long run, like what's going to be better for you in the long run, especially in the bear market. And in the bear market, you want a little bit extra confirmation so you're not having FOMO every time the market has a 2 to 3 day pop. Let's look at the ETFs. So we'll look at, what is strong in the current week. Now, last week I was really talking about solar. And last Friday, I put myself out there. I said, hey, this is a buy point right here. It starts to clear that. You need to get in. And I was right, and I was right in a big way. Again, the downside is it broke through on Fed day, and then it had major follow through on Thursday. Now, I get a lot of questions now. If you did go ahead and buy when this broke, I mean, you're sitting in a good position. But I get a lot of questions like, Steve, like it got extended quickly. What do I do here? Do I chase it? I'm always going to say don't chase it. Don't chase it. You have to be so disciplined. You have to be willing to sometimes let things go or give it the opportunity to pull back. Because, even pre-market right now, TAN, the solar ETF, is expected to be up a little bit. It could easily pull back next week into your zone and then boom. So you cannot get in a habit of chasing stocks or ETFs that are really getting extended past, support, or I would say past, 7 to 8% of support, because you want to put your stop loss right under that line, right, to kind of protect yourself. Be willing to let it go. And I understand that's hard. Again, we all have FOMO, we all have fear and greed. We're all human beings here. But I'm trying to really educate you and help you and put some rules in place so you can be disciplined, not just on this trade, but over your next 20, 50, 100 trades. And I know sometimes it's hard to think that long term, but if you can play the numbers game, then over the long term, then you're going to be way better off than getting too excited in the heat of battle. So right here, this ETF, the solar ETF, is up 15% this week. I mean, that's just massive. That's massive right there. So for me, I did follow my own advice, and even though I said, hey, buy at this level, it popped on Wednesday, so I waited, and it just got a little extended for me. So I would now waiting for the pullback that may or may not happen. I think it will, just based on this market type. I believe, and I've been saying this all year, I believe clean energy is the trade for the second half of the year. I am not a huge prediction guy. As a matter of fact, I hate predictions. I hate when people ask predictions. So I'm just going to continue to show the evidence on why I think that's the case. This line right here, this squiggly line, is a relative strength line. It's relative strength to the S&P 500. So when it's going up, it's outperforming the market. Now, this long-term chart looks like crap, right? It's been in a downtrend. It's been a sideways action for a long time. But since late January, it's been beating the market. And it's like being held back by a springboard, right? And you have kind of this inverse head and shoulders that I was talking about and I've been talking about, and you got the neckline right there that just broke out. I think this has got big upside right here. I think you need to let it ease a little bit, or else you're going to have a really, really wide stop. I mean, the way I look at it is, you're about, okay, so you're about 10% above that 200-day moving average, a little bit more. So if it pulls back a few percent, maybe even to the 80 range, I think that's a good place with the stop loss. Really, maybe just under 75, like 74.90, something like that. Kind of see if that support holds. But I do think this is the place to be. And let me kind of clean this up. And the reason why I continue to make this case is because when the invasion happened with Russia, really, and I think that was kind of in this range, so to speak, clean energy stocks really, really started taking off. Because, it's obvious why. If Russia shuts off the spigot, then the world starts investing more in clean energy. Clean energy stocks should do really well. So the case can easily be made on fundamentally why this happens. But from a technical perspective, it rolled over and it just chopped around for a while. However, that chop still beat the market as the market was going down. So that shows some strength right there. Because at the end of the day, these are stocks. They're going to move with the overall market. So if something is going in a range sideways when the market is going heavy down, I see that as a major, major positive, because it's just hanging in there. Okay. So this, to me, I'm going to continue to talk about this because I think this, if it, over the last several months, if I haven't made it clear, I think this 100% needs to be on everybody's radar for a potential big move. Now, obviously, if Russia, the invasion changes, obviously anything can happen. You just have to be willing to accept anything can happen at any point in time. That way, but the technical setup there is there, the relative strength is there, the fundamental case is there. You just need to get it right and put your stop losses, put your targets, and kind of go from there. So I'm spending most of my time today really just talking about this one ETF and this one industry. But you can see also, this is up 15% this week, and really that's been in the last 2 days. You can see in the top 10 this week, you got other clean energy ETFs, ICLN. Looks very similar, doesn't it? Okay, so you got ICLM, you got PBW. Not as strong. So when you have a group of clean energy ETFs, I'm always going to, and you're trying to figure out which one to buy, I'm always going to tell you buy the strongest one. Buy the strongest one. The other two are above the 200-day moving average. This one is not. So this one should be your last choice, because that means there's other groupings in this clean energy ETF that are, kind of holding it back. So let's kind of look at uranium for a second. Look at some other stuff. I think I made my case on the clean energy. So you got some other stuff in here. This still is in a downtrend. You could definitely make the argument that this is breaking out. So I'm interested to see what it does today, but I'm always looking for that retest because it almost always happens. So I'm looking for maybe another pop and a retest, see where the market settles next week. You could definitely enter here, would be a reasonable place with a stop under $20 because that would keep your stop loss around 6%, 7% depending where it opens. So this is also a good place to be. You just have to be willing to accept that you're probably going to get a retest of that trend line. So uranium look good. So you got some Brazil and Argentina up in here. And so there's some opportunity there. However, the chart doesn't really look that good. It just kind of looks, very zigzag. Hasn't really cleared any hurdles. Not above the 50, not above the 200-day. I'm not there yet. It needs to make a bigger move. Argentina is really starting to show some strength. I haven't even researched why some of these South American countries, but maybe that's something to put on your radar. Like throw a Brazil on your watch list and put it on your radar and see what it's doing next week. So you do have some soybeans. This is pretty interesting right here because you have, it looks like a topping pattern and it broke and now it's coming right back. I'm not really a big fan of this pattern right here, even though it could come back into the range and really get out of here, sucked all the bears in and then just kind of comes right back. But I don't know. I need to see more balance in the pattern, and I'm just not seeing that yet. I'm kind of seeing a straight break and a straight back. I prefer to see a little sideways action, let it take a breath. So I hope this was helpful. I know I've talked a lot of clean energy last week for a while, and this week I really, really focused on that. But I'd rather give you a couple really, really good ideas or that is showing all kinds of strengths on the chart than, just give you a ton of ideas all over the place. So I hope this was helpful. I hope everybody has a great weekend.